This is the Value Investor Podcast with Tracey Reineck. All things value, all the time.
Welcome back, value investors. So a lot is going on this week at the end of January 2025, especially with those AI stocks. Now, as value investors, it's been a little difficult for us to get in these AI names, but we're always keeping an eye out for possible buying opportunities. And maybe we got one earlier this week on January 27th when it emerged or came out that Chinese startup AI company DeepSeek figured out an easier, cheaper way to train the AI. And that created a cascade of selling in a lot of the big AI names, especially on the infrastructure side. And that's the chips, the data centers, the build out of the data centers, the cooling of the data centers, all these types of companies that we actually have covered here on the Value Investor Podcast in the past. I've done a couple podcasts where we've just looked like, are any of these cheap enough for value investors to, get in or consider? And initially in 2023, when the whole AI revolution first started taking off, there were quite a few AI infrastructure type stocks that were cheap enough for us value investors to take a leap at. But that's been few and far between once they started soaring in late in 2023, 2024, of course, and even to some extent here in 2025. But now we've had a quick sell-off on this DeepSeek fears. And I did another podcast on the market edge this week. You might want to go check that out on YouTube. Go to, not on our podcast page, but our regular page, zacks.com/YouTube. So you can see the market edge podcast there. But that one was on, should you be buying the AI stocks on the sell-off? And as I was doing the podcast, it dawned on me as I was looking at the fundamentals for a bunch of the AI infrastructure stocks that, hey, at least one of these is actually pretty cheap. And you can hear my surprise on the podcast when I discover that that is true. So for this week's Value Investor, I wanted to take a closer look at this one stock because it is the cheapest AI stock right now. And dare I say, it actually has classic value fundamentals on the key things we look at, like PE, price to book ratios. The price to sales ratio is right around where we look. Hasn't quite gone under the 1, but is very close. So yeah, one of these is actually a cheap AI stock, but like genuinely cheap as a value. But there's always a catch, right? And the catch might be that maybe this is the one you don't want to be buying, even though it's cheap. But let's take a closer look at it anyways, just to see what's going on with Super Microcomputer, ticker S as in Sam, M as in Mary, CI. And I know what you're thinking, but Tracey, this is the company that had the accounting issues. That's why it's cheap. And you would be right. They did have accounting issues. So Super Microcomputer is involved in the services side. They make the racks that go into the data centers. They have contracts, deals with a bunch of the big AI chip players, including NVDA. And so this stock soared. It was up over 1,000% by early 2024. It was like good times are here again. The earnings and the revenue were like doubling every year. And then word came out that its auditor, Ernst & Young, decided to quit because it wasn't trusting what management was telling it, apparently. And then the shares plunged down. And then they were threatened with delisting or other things as they were not filing annual reports and other filings required by the SEC. So it was a mess, as it always is whenever some kind of accounting issue is discovered. Now, they hired an independent special committee to go and investigate. I used to work as a lawyer in Silicon Valley, so I'm familiar with this process. I don't know if they hired a law firm, but many times it is. And then they go and investigate to see what's going on. So this independent special committee actually did not find any wrongdoing in the accounting practices of Supermicro. They put out a statement in early December of 2024 that it was not finding anything, but it did recommend replacing the CFO, which Supermicro was doing. So the stock got a little bit of bump on the news in early December that they did not find any wrongdoing, but it's still pretty depressed and has actually fallen from that level. And now with the DeepSeek news, it's weak again. So just taking a look at the last couple of days, Supermicro, and I looked at the 5-day chart, but most of it is included in that first sell-off for DeepSeek. But during this period, Supermicro is down 16.6%. So it's dipped down quite a bit again. But over the last 6 months, because of the accounting issues, it's still down 60.2%. So what about the cheapness? What's actually going on with that end of things, and what do the earnings estimates look like now? So it's cheap. Forward PE now, after this recent sell-off, is just 8.9. So it was a little over 9 when I did the Market Edge. And so it was a little shocking to me to see one of these AI stocks at just 8.9 times. But that it doesn't stop there. I did look a little bit deeper for this podcast, and sure enough, price to book ratio is just 2.9. The industry is at 9.1. So it is cheap based on its industry, but that's not really the AI industry. Its industry is under computer storage devices. So that's what it's comparing with, but still very cheap. I look for price to book ratios under 3 as a value. So this is right there at 2.9. Price to sales ratio, the other key ratio we really look at, is 1.05. So like I said, it's right there. 1 and under on the price to sales means you're getting the sales cheaper than what the company is, but it's right there. So we're not overpaying for these sales, that's for sure. And that's the key thing with these AI stocks. A lot of them are very expensive on a price to sales basis now, even like well above even the growthy names. So just taking a look at Vertiv, which also makes the racks that go in. I own Vertiv in my own portfolio and in Zach's value investor portfolio. And this one still has pulled back as well over this week. It's down 25.9%, but it still has a PE of 29.8. A price to book, okay, get ready, of 22, and a price to sales, get ready on this one too, 5.3. So none of those are values or even close, and they're not even very attractive growth at this point, but you are really paying for this continuing earnings growth and the story of AI revolution. So 2023 Vertiv earnings were up 234% because that's when it all started. And that's when its partners, which does include NVIDIA, had to put in a lot of orders. So earnings soared, sales up 20.6. And then 2024, we're still waiting to close out the year, so we haven't gotten fourth quarter in, but the estimate is for earnings growth of 52.5% on sales growth of 14%. Estimates for 2025, 32.6% again on earnings, 16.6 times on sales. Pretty nice growth continuing if it does. We don't know with DeepSeek what may happen over the next year, but we'll see as we go along. But even with this growth, let's assuming they still do it for 2025, it is not a cheap stock here. Yes, I still own it in the value investor and in my own personal portfolio, but I did buy it mostly when it was a lot cheaper. But still, I still actually do like it on this pullback here if these numbers can hold, right? But you're not getting it cheap whatsoever. Returning to Supermicro, the one that is actually cheap on all of these other metrics, on the value metrics, what does its earnings growth look like? So it's been pretty wild, even more so than with Vertiv. 2023 earnings growth up 107% on sales growth of 37%. 2024 up 87% on earnings, sales growth 109%. They're in the fiscal year, so we have closed out 2024. We're in the middle of 2025, fiscal 2025 now. Our earnings expected to be up 43% on sales, up 61%. And then we're going to get into 2026 at the second half of this year, earnings up 21% on revenue 13.8. Still looking good. Of course, it's going to slow. Nobody can double their earnings year after year after year forever, not even in the AI revolution. But how much it's going to slow, we don't yet know because of the DeepSeek, announcement and what may happen there if it does get cheaper and you don't need as many of the pricier and faster NVIDIA chips to actually achieve the AI training, then you may not need as much of what these other infrastructure companies are making and doing. So that's the key question that I tried to look at for the market edge. But just looking at this, Supermicro is a extremely cheap growth stock here. If you think that those accounting issues are done, that's in the rearview mirror, that they have a new CFO and that they are seeing this business and moving forward, this is fundamentally a cheap stock. Now, I also did want to look at the chips real quick, again, as another comparison. So, let's look at NVIDIA, of course, we can't not. And NVIDIA has also seen the same kind of growth. 2023, however, but this was fiscal year, so down 25% on earnings, and then sales growth up just 0.2%. But then it exploded with the AI revolution because it's on the fiscal year, fiscal 2024, earnings up 293%. On sales up 125, fiscal 2025 earnings up 126% on sales of 111%. And then fiscal 2026 up 43% on earnings and 48% on revenue. This is because everybody needs their chips. But do they? We don't know. We're going to wait and see. PE now down to 43 times because NVIDIA is down 16.3% when I'm recording this on January 29th. And over the 6 months, it surprisingly is only up 7.7%. Now, I told you Supermicro was down 60% over that 6-month period, but that was because of what was going on with the lack of filings and, the independent review and investigation. But Vertiv also up, but big over the last 6 months, up 42.5%. So NVIDIA itself, though, only up 7.7 now over the last 6 months. And that's why you're getting a little bit of pullback in the valuations of NVIDIA, but it hasn't been cheap in many years, many years, but certainly not in the last 2 years, even as earnings and sales have soared. So again, the PE is still 43.9. But that is down. I think it was 48 the last I was looking at it a couple weeks ago. So it's down to 43.9. Price to book ratio 48. Does show an industry price to book of 1.2. I'm sorry, I have to laugh. Now, this is in the semiconductor general industry, as you might suspect. But the rest of the semis are pretty cheap on a price to book ratio, but not NVIDIA. 48. I'm looking at some of its other competitors. Intel price to book ratio is 0.8. It's not really in the AI revolution. And then Texas Instruments 9.7. So it's pretty pricey in that level too, Texas Instruments. Intel, we know what some of the issues going on there too. So Intel is cheap on a fundamental basis. But price to sales, that's also key for these growth kind of names. You can dismiss price to earnings all you want, but price to sales tells more of the tale. It's at 27.9. 27.9. And again, Supermicro, 1.05. Industry is at 1.6 for price to sales, but Texas Instruments is at 10.5. So that's not cheap. And even Intel, 1.6, not as cheap as Supermicro on price to sales. So NVIDIA has always been expensive, remains so, but it's still down 16.3% just this week. And then I want to look at Broadcom, ticker AVGO, because I own it in the insider trader, been watching it. It's a genuine play on the AI revolution on the chip side, and it was trading at new all-time highs until the DeepSeek. It's down 14.2% this week during the DeepSeek panic, and over the last 6 months, it's up 36%. So it's just really NVIDIA that's lagging, well, and Supermicro. But NVIDIA of the non-accounting issues names, that's up only 7.7 during that 6-month time period. Earnings growth is looking real good with Broadcom as well. 2023, it saw earnings growth of 12.5 on revenue of 7.9%. 2024, it's completed, so we're on the fiscal year here. Earnings up 15.1 on sales growth of 44%. And then 2025 expected earnings growth of 29.6 on sales of 18.3. 2026 expected 18.1 on earnings, 14.5 on sales. Again, you inevitably will have a slowing in both earnings and sales because you're doing this year over year. So think about, just what kind of growth that is in just a 2-year track. Pretty incredible. Most companies cannot continue with that kind of, very strong double-digit growth or triple digits in some of these cases year over year over year. What does this valuation look like? Is it any cheaper? PE 32.9 for Broadcom. That's not that cheap. Price to book 14.4. Price to sales 18.8. So nothing cheap about Broadcom either. It is only Supermicro out of these infrastructure type stocks that is a true value stock and is the cheapest. But it's cheap for a reason, right? Because of everything that went on in 2024, even though the independent special committee did not find any wrongdoing, and they did not have to restate any of their results actually as well. So should you be diving in? I think it's up to you. They are going to have some earnings coming up, so we're all going to be tuned into all these AI earnings reports, as well as just big tech in general. We have a earnings report due next week, the first week of February 2025. It's not been confirmed, but sometime in early February, we probably will get earnings from Supermicro. I'll be tuning in to see what they have to say. But stock is really cheap here. Again, PE of 8.9, price to book of 2.8, price to sales 1.05, market cap 15.7 billion, shares down 60.2% in the last just 6 months. Okay, so that is the cheapest AI stock. I'm going to keep looking around as always, but as value investors, we like to dive in if there's some kind of change in the storyline. If there is a big pullback on something like a DeepSeek announcement and we see a panic, I always tend to go and seek out the other companies in the panicked industry or area to see if there's any kind of value there. And each of these has gotten considerably cheaper. And so if you are looking for a little bit of a growth, then maybe you might want to take a look at all of the stocks that I talked about, these 4 stocks today. But if you are just seeking out a true value stock, and you are willing to roll the dice a bit on a beaten down AI stock, then Supermicro should be on your watch list, and listen in on that conference call that they're going to have here in the early weeks of February so that you can see for yourself what's going on. And we'll see as we move forward with everything in AI. Nothing is guaranteed. None of these earnings are guaranteed until, they actually do them. So we'll be watching. And as I said, I'm always willing to seek out some cheap AI revolution stocks. And now we're starting to see some. So let me recap the tickers again. Supermicro is S as in Sam, M as in Mary, C, I, SMCI. We had Vertiv, which I own, and I own in the value investor portfolio as well. V as in Victor, R, T as in Tom. We had Broadcom, which I own in the insider trader, ticker A, V as in Victor, G, O. Then we had NVDA, ticker N as in Nancy, V as in Victor, DA. Of course, NVDA. Its earnings aren't coming for a while because it's at the very end of earnings season. But as always, you want to be sure to get all of the podcasts. I know many of you are subscribing over on YouTube to both the Market Edge, which is on our normal channel, and the podcast channel, and you're getting all of our podcasts there, which you should. There's great podcasts there, including ETF Spotlight. So get the Value Investor there. You're also getting us on Apple. We're on Spotify. We're on Amazon Music. Anywhere you can get podcasts, you can get us. But be sure to get us, because I'll be back next week with some more value stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.